Hey, welcome back to this recap for Tuesday. And let's kind of take a look at price action and see what happened today and what didn't really happen. It's funny, as I was hanging out on a stream with some other people, and it was a joke that kind of came up, was just saying that people don't like to hear so much around the moving averages and the 200, the 21. They like to just hear abbreviations and random terms. I don't really know if that's true or not. If you do like that, let me know. I can go that route, but I would hope that you would want to learn how this all works so you understand it. I could just throw a bunch of random words in there, but I don't know. It's kind of funny, interesting though. But anyway, let's jump on over to the charts here and take a look at this mess I have going on. And it may look like a rat's nest, but I wanted to walk through it. Normally I kind of take some of this stuff off because this is my charting throughout the day, sometimes just depending on what's happening. And I want to see if things are going to break out or break down, and how things are just kind of moving forward. So as you can see here, we're looking at the 15-minute chart, and these white lines are really, I'm just looking for areas because we've been making higher lows as this has been climbing up, which that's what we want to see. You can see though we are topping out, so you do have this higher high off this higher low now, and you also see the divergence here in the RSI. So this is higher than this high. So you're starting to get the opposite of each other, which would be bearish divergence in this case. And if you want to mark out bearish divergence, you don't use the bottom of RSI, you use the top. And the same thing with the charts. If you're going to go use bearish to go down, you want to use the top of the charts. If you're going to go the other way, though, and you want to go bullish, you use the bottom of the charts. So you can see like this low here, and then you have a higher low and you have a higher low. So that's not divergence. They're lined up with each other. They both agree that they're going up. So obviously this low, this would have to be down lower, or this would be the way it is, and this would be down lower than this point here. Basic divergence in the charts. So anyway, you do see that divergence, and that's why you see these lines on here, because what I'm trying to do is see, hey, well, this is a bull flag. And these poles that you see are these directions of where they go. Like this morning when we first started out, we played in this, and we got the breakout. Well, I needed 2 candles above close to go ahead and start looking at a trade. You can see that happened. But then right here, you can see that it already had topped out, showed that it wanted to roll over. So that was like, plus we're breaking down on that 200 and starting to come back down to its 21. So even though we were sitting in a bull flag, it's hard to get too excited to take this run up. And that's where you see the area that we're looking for this to go up higher and push out, because we were getting above these areas. And that's kind of where we expected it to go up to, is around that 88.6, 88.5 level is kind of what I'd be looking for. But you can see that it didn't really push up there through all this times, and it actually was creating, this was the higher high, and then this was a lower high. Then it came back up and made it almost even, but still was lower. Broke up a little bit. Now this could just snap up here and just fall. We'll kind of have to see. There's getting, what I'm worried about a little bit, or not really worried about it, I guess. For me, the confidence of this breaking out has gotten less and less throughout the day, and more likely to go back more of a bearish. And really this looks more and more like a pull back after this hard drop. And we're pulling back and we're getting ready to go over again. Everything's exhausted. I'm looking at the 1 hour just to kind of show you this. We had this cross and we expected this to really push and run up, and we had a lot of push. It got harder and harder, and I was trying to get up there, and now it's starting to kind of roll over, and so is everything else, like the exhaustion mode. Long sprint, it took off too early in the race, and now you can't keep up with it. So yeah, if you're looking at this in that way and you're going, okay, well, it's just going to keep going, as of right now, that's kind of what you'd be thinking is more bearish. We're expecting a little more of a pullback. Now there is levels that this could catch on, and that's what you see here. This was the first level in the morning. We had played on it. This is a strong area. This was the original run that I was looking at in the morning. Drew this line on here before this price action really got going, and we were playing down through here, and I expected this to run up. course, it came back and started to test the bottom of the 30-minute candle, came back, tested that key level, and started to build here. But it's just kind of, like I said, I've been trying to burn out now. If this starts to come back down, I'll be watching for it to our breakout area and then break down through here and just start to roll back down. Obviously, for today, the breakdown trigger is way down here at 85,860. So this price action, really, if you're reading my levels that are right here and right down here, this price action could actually break down, and it could fight through these levels here, and it could break down through here, but it may come down here and bottom out and start to rebuild and climb back out of here. All we have to do is just continue to watch the time frames and indicators, kind of like we're watching right now. This is having a hard time climbing. This has actually been rolling over slowly. Same with this. Has not shown any bullish grab. The bulls had their chance and they're not taking it. So when that happens, that's a typical time for a rollover, or at least a setback, and build some strength and run again. So that's what I'm watching. This 200, we're above it right now, and we're above that 21. But again, like I said, this top area is what we've been grinding on. Now going in, looking at this area here, like we were talking about, we were above the breakout area, we were above the 200, and we started to break back down. A lot of times in this case, even if I was above that breakout area and we were still underneath this 200, even if I got 2 candle closes above that and was fighting in this zone, I would definitely stay away from that too. The reason why is because I wanted to get above the 200. And you could watch it. I mean, if the stochages were all down and say they were more grinding and starting to show reversal, and you were in that little zone right there, you could start looking at this doing a strong breakout off the 200. Anytime you get to a 200, it's a good time for it to start to break out and use that to your advantage. 200 is a strong indicator on a chart. 200 simple moving average. It doesn't really have a lot of strength unless you have the levels around it as well. Kind of like these breakout levels we talk about, and the bigger levels up here. Like here's your daily resistance up here, and here down here on the lower area is your it's actually down right through here. Here's your daily support area at 85,500, which falls right in your the monthly time frame that we've been watching. So yeah, if this thing comes down here and just starts to nail this, boom, 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 and we can see this just break through. Now, if you look at your 4 hour, it is topping out. I would have expected this 4 hour here in the day. You can see right here is this white candle, vertical candles, and then I marked this just a little bit on the 15-minute chart. You can see that it's pushing up, and this is how we started the early morning, and it was turning around saying, hey, we look like we're going to run today. And that's why I was watching those key levels on my charts as well. At least 88.5 to 90 to 89,000. I was definitely thinking about that. Now we have 34 minutes left in this 4 hour chart. You can see it stacked up and then just rolled over. We haven't lost, the support yet, but the next 4 hour candle could be down and start to come back down through these key levels that it already set. It could easily just be the stair step down like you see here. So this could easily roll back over and grind back down. You have the 1 hour as well. You're above its 21, which is awesome, but you're below its 200. It's the same thing. This I would expect it to run up and want to get up there, just because we also had cleared this 200 on the 15 with no energy. So it's just stuff that I'm thinking, and that's why I left these levels on the charts. You can see I moved them up throughout the day as price action played along, because I was watching, hey, if we turn here and I start getting back up and I get the 2 candle closes, can I jump into this chart again? Is there the possibility to get in? And if it does, is the target still the same? And the way I get these targets is I'm going off the levels. So like right here, we saw it break back up and start to build back out. So here was that flag right here, and I would expect this was kind of the new run back up. I was like, okay, well, if this stays in this pattern, we could build this and run up. Well, if I did, we'd break out right off of this area right here, which is the area of support or the resistance. Down here is your support level, and I would expected that to snap and say, hey, here we go. But, it came back up and it rejected. held support, you know, that was the positive side. It kept building and building and pushing, but it could not push at all. Once it starts to get up in here, it needs to commit, and you can see that this first tighter bear that I took from, or bull flag that I took from today, it just traded along it and then started to fail at the end, started to show failure. And you can see it starting to show rollover right here. We have this bigger flag that I kind of drew here from the start of the day. I drew this other one, which was right here. And then I went in and said, well, this could be still a bigger flag here, and we could trade back down and then catch this back again. But even if it does, I'll reanalyze it. Yeah, I mean, I'm watching it for it to either break down and land in this area and start to rebuild. Then, okay, let's watch it again. But if it doesn't, then I'm like, oh, well, we've already started to lose the pattern. It's just telling me that we're losing the pattern. So that's why you see all the lines on my charts, because I'm always looking for it to tell me what to do, and then I put my key levels of support and resistance on there for us to take advantage of that. Of course, you could always ask the AI for the same thing. So you could ask Kabroda Trading Battle Box and dig into that and say, hey, you know, here's my levels right here. Here is the bull flag. You could even take a screenshot of it if you wanted, and paste that into OpenAI. And if you're using our Kabroda Trading Battle Box, it's kind of already programmed to think and look at these levels with you. And it could say, hey, you know, based on the flag, this is what you kind of want to see. If it doesn't break through these levels or does something else, then you may or may not get this to work. And it would kind of keep you protected there to help you kind of front run and do kind of what I'm doing here, and really analyze this. And if I was looking at this right now and saying, hey, is this going to run up any higher? Because you're probably looking at this going, okay, well, this guy's crazy. You know, what is he looking at now? If this bounces here, I'm going to be using this bigger flag. So all this stuff right here, I'm going to get rid of, obviously, these key levels on watch. But this right here has already told me that we've lost this pattern. It was right here. We lost that pattern right here. Even though it bounced back up into it, it instantly rejected and came right down below. So I'm going to say, hey, that's out of here. So now it's already cleaner already. It's also telling me that this area right here could be the breakout, but is this the area that I could go by? I may still use this flag because, yeah, it didn't come all the way down here. I could use the bigger flag, so I'm going to go ahead and mark 2 levels for myself. For me right now, I would say, let's be conservative. Always rather be conservative. So here's your breakout area off of this area right through here. Let's see if we can get above that. And if I can start building above that, I really also want you to clear this area first for me. But the other thing is where, if these are my breakout areas now, because it was originally down there, I would say, okay, well, let's look at a bigger flag potential, because we're still in this bigger flag pattern. I'm going to use the original bounce off of it and then the topping. So I'm going to say, okay, well, great. If you can run out of there, where could you take us on in both of these scenarios? Say you have all this is pretty much X'd. So you still have this original pattern through here. That still looks pretty good. So I would say, okay, well, that still looks good. And then I'm going to go ahead and say, well, this could also look good. So if you looked at this now, you're looking at 88,500. It's still that same kind of key level from even this morning. We were talking about that actually on our live today. And then you have this upper area right around that 89,000, in this case 200. Nothing's perfect, so I mean 89,000, 85,000, 88,500. Now this has to actually break out of here for that to happen, and this could trade right down through here and start to catch and start to grind out. Now once it gets through here and does either this or it needs to do this, just like you saw before, once it started to curl over here, yeah, it started breaking down. You just have this bigger pattern that it could still stay in, and it's respected, and it keeps making higher lows through this. And here I didn't like this. It's starting to grind out. It's starting to show flattening. But regardless, that is how you read charts. So that is about it, guys. Hopefully I gave you a little bit of a chart reading lesson there. Gave you some levels, what we look at, what I looked at, why I didn't get in, why I'm being patient, what am I looking for now, and what I'm looking for right now is this 200 and this 21. So this 21 starting to grind up. Price action's underneath of it. It needs to break these key levels. This is the smash zone, if you will, and price wants to move away from it. So anytime there gets a lot of compression, it wants to expand away. And right now you're seeing a lot of compression here on that 15-minute. And you could see a quick expansion. So this could actually just do a quick expansion up and a quick expansion back down. And the reason why is just because we grind in this area. A lot of people now have said, hey, I'm going to short this. I'm tired of sitting around. And they're going to build it just like this. And they're going to trade it down. And they could trade it down. This looks like a great trade. Let's go ahead and get into it. And the market's going to say, go ahead. And what we're going to do is we're going to go right up here and take all these stops that people put on. And then it's going to come right down and trade down to that anyways. So very common in the market. If you feel like you're that kind of a trader, every time you put it on, it goes the other way on you. There you go. Now you know why. So what would you do to not have that happen is exactly what we talk about, is wait for it to actually tell you what it's going to do. Get underneath this 200. Yeah, get underneath this 21. So get that price action back down in here. Show that you're going to lose this key area of uptrend. It could even come down and backtest it here and then grind down. Once it starts breaking these key levels that I have drawn on the charts, this is definitely telling you it looks like it's going to start breaking after it kind of behaves that way. This would be a great area to how you actually want to trade this. Once it starts to break down, you are going to see, well, where's that 200? It's going to be somewhere right in here. That's where I would use as my stop. And from there, I'm going to go ahead and trade this out. Now, is it as good trade as if I took it up here? No. But the plus is, I also know the trend now. I'm not playing in this game up here that I just talked about, that it could go one way or the other, which is classic, typical behavior when you hear somebody talk like this, is they just say, well, it could go down and it could go up. Yeah. Wow. Thanks for the help there, because that's about how every single price action on every single chart that I've ever seen. Sometimes it goes down, sometimes it goes up. But anyways, now you know kind of why and why I have these lines on here and where I'm using for and using them for and really what I'm looking for at this point. So, all right, guys, I will let you go. And if you have any questions, please put them in the comments. I mean, I can definitely talk about a lot of stuff if you want to hear about it. I don't point a lot of things out just because I don't want to confuse you. I want to keep it basic so that way you can use it. I want to keep all these free tools on there. I don't want to confuse you with the other tools. Sometimes you do see some stuff in my charts that we either have built or that we're using for other things, but I don't talk about them because I don't want to have somebody have to go out and buy a bunch of stuff. As a beginner starting out, learn how to read this stuff because really you can get rid of a lot of this fanciness, and you can be a very successful trader in this case. So we just use simple moving averages, like I said before, RSI, MACD, and Stoaches. And some of these we don't even use that much. They're just check boxes. You check so many off, then a high probability of potential trades, and yeah, take advantage of it and make some profit. So that's about it. Like and subscribe. Check out our live. We have our live on 8 o'clock Central Standard Time, and that is Tuesday, Wednesday, and Thursday. So we have 2 more still going on this week, and great place to ask questions as well. That's actually, you can see live and how these levels are set and the stuff that you're just seeing me more on the stagnant side that I just talk about. So alrighty, we'll see you guys in the next recap. See you later.